Hello, hello, and welcome to Decoding the Market. This is the quarterly series where we showcase what's new in the research department here at StreetEasy, tailored to you, our agent community. A few housekeeping items before we begin. Today's session is being recorded. So if you missed something or perhaps you want to share with your colleagues later, it'll arrive in your inbox shortly after this webinar closes. Next, you're welcome to submit questions at any time using the control pane within the GoToWebinar platform, and we will get to those questions at the end. And also feel free to share anything you see and hear today on social media, and don't forget to tag us at StreetEasy. And finally, at the end of today's event, as a thank you for your attendance and partnership, you'll have the opportunity to select a gift. And to redeem that, you must stay for the entire webinar. And at the end, a survey will pop up. So make sure you take that survey. And then once it's filled out, wait about 24 hours and you will receive an email from StreetEasy prompting you to select your gift. You can select an item of your choosing or select a donation to one of the nonprofit organizations listed, including those that are fighting for civil rights, COVID relief, and fair housing. So today, we are going to begin with an overview of the recently released quarterly market report, followed by a discussion led by our Director of Industry Relations, Stephanie Schoenholtz. So I forgot to introduce myself. I'm Lisa Holden, and I run Industry Communications here. Stephanie, hello. Where are you tuning in from?
Hi, everyone. Today, I happen to be in Westchester, and if you see me occasionally looking behind me, there's a door to the room I'm in. I tried to secure it. There are no locks in my house. So if you see my 5-year-old or my 3-year-old pop their head in, because they like to meet everybody who's on a screen, such is life working from home. But I'm in Westchester today, Lisa.
Well, I am here to say they're very adorable. So if they pop up, it will be a joy for all of us. And next up, I'll introduce our StreetEasy experts. Devin Somek from Living New York. Devin, you are one of the earliest adopters of StreetEasy experts and one of the first to close a deal in the program. You've closed several deals since, which is why you're on our panel today. What's your secret?
Thanks for the kind introduction. At our firm, we really tend to embrace technology versus resist it like a lot of others in the brokerage community. And so it's very natural for us to pilot softwares, programs, and with StreetEasy, which you could argue is the leading advertising platform, rolled out this concept, we naturally jumped on it.
Awesome. Well, we're just thrilled to have you and your tech prowess on the line today. Next up, we have Shauna Tamayose with Apartment 212. Thanks for being here, and congrats on your recent $2.3 million closing. Now, was that a connection you made through StreetEasy experts?
So thank God that I wanted one COVID deal, and that was the one COVID deal that I actually got. And it definitely wouldn't have happened unless it was from StreetEasy Experts program. And so I felt very lucky and very blessed at the fact that, while majority of agents weren't able to close any deals, I was able to get one. So thank you.
Awesome. Well, congrats to you, and we're thrilled to have you here. We are going to get into the experts program and answer all of your questions around that after this. But for now, I'll invite our speakers to turn their cameras off, except for Nancy Wu. She's our StreetEasy economist who's behind our quarterly market report, and she's here to walk through her recently released findings and share her take on what it means for the future of the market. So Nancy, I will go away. I'll come back at Q&A. Over to you.
All right, thanks Lisa, and thank you everyone for being here today. I'm Nancy, I'm StreetEasy's economist, and I live day in and day out in the data. We make quarterly and monthly market reports where we talk about all the stats on the market on the sales and the rental side. And I'm always looking at new ways that the data is important for the real estate industry, and always welcome to new ideas. So if you have any ideas of future research that come up, let me know. It's been a really busy quarter for the sales market and the rentals market in New York City, and I'm excited to go through the numbers with you guys. my goal today is to help you guys walk out with an idea of the market and how it's been changing so rapidly in the past quarter. And I also love questions, so make sure to drop any questions you have and we can answer them in the Q&A section. So let's get started. So I'll start with a sales market overview and then go into rentals. So let's look at where the market currently is. These are the median closing prices as of the third quarter. So from June to September, there are actually quite a number of closings that happened in this past quarter, even though COVID has been making closings slower, but there's been a lot of closings nonetheless. And we're actually seeing that the prices of these closings are higher than they typically are. So Manhattan rose above 1 million when it's usually under 1 million. So that's something that's interesting about the types of closings that are happening on the market. They tend to be slightly higher price than what we typically see at the median. So that's just a sense of where the market currently is as of the last quarter. Now going into how prices have been changing to get a sense of where the market has been going. So StreetEasy has our price index, which many of you guys know about from these past presentations. It's our way of tracing year-over-year changes in prices, and it's a better way of looking at price changes than median asking prices because we're able to control for the differences in the number of bedrooms on the market and the neighborhood and all of those factors that you would think of that could be compounding price changes. So we're able to control for all of that and look at an accurate sense of how prices are moving. So looking at the rate of price growth in New York City, in the past quarter, we saw that Manhattan prices fell by 4% year over year. And that's been a trend that's been continuing for the third year in a row now. So we know that there's been a slowdown in New York City's real estate market. Manhattan prices have been falling. It's been a weak market for quite a while. Manhattan had a strong recovery from the Great Recession where prices were soaring at over 10% year over year in 2014, 2015. And those high prices have started to adjust downwards as sellers are struggling to get their inventory off the market. So we're seeing that the past 3 years, there's been a slowdown in the Manhattan sales market, and that's continued through COVID at about the same rate of 4% year over year drops. In Brooklyn and Queens, the sales market has been stable and prices have been stagnating. So Brooklyn and Queens both had little changes in prices year over year, and that's been happening for quite a while now. Queens had a slower recovery than Manhattan and Brooklyn after the recession, and prices peaked only in 2018, and they've been slowing down since then as prices are recovering. But so far, COVID hasn't changed the pattern of the sales market quite as much as it has on the rentals market. We're seeing similar trends continue from before the pandemic hit the city to now, and this is something that we expect will continue to change in the future, and I have some predictions about that will be coming up in the later part of this presentation. So let's talk about why prices are falling and what is happening on the sales market. So inventory has hit near highs in Brooklyn, Queens, and Manhattan, and we saw that there was a dip in inventory in the beginning of the pandemic when sellers were taking their listings off the market. And since open houses in person were allowed again after phase 2 reopening in July, we've seen since then that inventory has been piling back onto the market, and now we're seeing near record highs in Manhattan, Brooklyn, and Queens. That means that it's a very competitive market now, again, for sellers who are looking for a buyer, and it's something that will continue to grow as the pandemic goes on. What's interesting, though, is that there has been quite a lot of sales going into contract. So pending sales is our way of looking at sales that went into contract in the past quarter. And you see that there's been a dip in COVID and then a spike in the past quarter. So even though homes going to contract have fallen in Manhattan and Queens, they have still been rising consistently since the middle of the pandemic. And Brooklyn, however, has actually had a really strong sales market this past quarter. So sales going to contract in Brooklyn hit record highs since the Great Recession. We saw that there were a lot of closings happening in Brooklyn. That means that despite all this talk about people moving to the suburbs and leaving the city, there are a lot of buyers who are making a long-term commitment to living in the city, and they're looking in Brooklyn, they're buying in Brooklyn. Now, looking at the areas where people are buying, it's actually really interesting because the places with the most pending sales increasing year over year are actually in areas that are farther away and not the Manhattan adjacent neighborhoods. So we saw the most pending sales occurred in Park Slope, in Bed-Stuy, Bay Ridge, Sheepshead Bay, and pending sales dropped year over year in Williamsburg and Brooklyn. In Queens, we're seeing similar trends where pending sales increased in Forest Hills, the most, but dropped in Long Island City. So the sales market is weakening in Manhattan and Manhattan adjacent neighborhoods, but growing in areas that have a longer commute time and are farther away from the city. And that makes sense. It's one of the trends that are changing and will be lasting on the market with this new remote work environment. The premium of having a faster commute time by living in Manhattan is going to go down. So we're going to see less demand for Manhattan apartments and for Manhattan adjacent neighborhoods apartments. And that's something that's been reflecting on our closings on our pending sales data. Now, one of the reasons why pending sales has been going up is that sellers are actually giving record high discounts. So there's been a record high share of discounts coming onto the market. And this is a new trend because we talked about how the sales market has been weakening for the third year in a row now. And in the past, in 2018 and 2019, we haven't seen that many discounts. We've seen that discounts have not reflected the weakness of the market, and sellers were unwilling to negotiate and unwilling to cut prices. Now it looks like sellers are actually reflecting and to the reality of the market and giving discounts and advertising them on StreetEasy. And that's been incentivizing a lot of buyers to actually negotiate and to help them move properties off the market quicker. So speaking of moving properties off the market quicker, when we look at our median days on market data, we saw that it's actually dropped significantly in this past quarter. So homes that are selling, homes that are on the market are moving much faster than they have in the past. And that's a sign that when sellers price well and they're giving discounts and open to negotiation, then there's a lot of sales happening and homes are coming off the market faster. And also keeping in mind that people who are selling now might be more incentivized to get their homes off the market faster, because if you're selling during a pandemic, you probably have a good reason to, and there's probably some life changes, and there's a lot of factors here that are happening that are contributing to these faster home sales. Now, looking at the homes that did close in the pandemic, I was really interested, like what actually sold during the pandemic, what actually closed. So looking at our closings data, we looked at where homes were closing, the median recorded sales price of those homes, and where were we seeing the highest discounts. So the discount in this case means the difference between the closing price and the asking price. And we saw that there's been a diverse range of neighborhoods that had the highest discounts. We're seeing that Midtown had the highest with a median discount of 11%. So a $1 million home would be going for under $900,000 on the market. And we're seeing Jamaica, Tribeca, Dagger Heights, Elmhurst, all of these neighborhoods show up on this list as having large discounts of the closing price to the asking price. So it's interesting because it is quite a range of neighborhoods. Some of these neighborhoods on this list are areas that have been more impacted by COVID, and some of these areas are areas in Manhattan that have had less demand based on its location. But the ones that are selling at high discounts. And we also have this piece coming out soon, so make sure to check that out because it'll be on the blog soon, and this is some newly released new data that we're sharing right now. So some takeaways that I would have for your buyers and your sellers is that there's the question I get all the time, which is now a good time to buy? Will the market hit the bottom? And it's ultimately a personal decision. I would tell them, I would say that right now mortgage rates are at record lows, but they'll continue to be low for the foreseeable future. And timing the market is important, but it's also impossible. But it's good to know that prices are no longer at the peak. Buying when prices are at the peak, typically sellers are more likely to sell at a loss when they buy at the peak of the market. But good news is that the peak of the market occurred in 2017, 2018. So now they've been adjusting downwards and prices have been falling for the third year in a row, which means that if buyers want to buy now, then they're not buying at the peak of the market. So that's always a good sign. And ultimately, prices still have more room to fall. As we talked about, there's been price falls, but it's still along the same rate as it was pre-pandemic. And with the inventory on the market, with the discounts, we're seeing that homes need discounts in order to actually sell quickly. So we are expecting prices to continue to fall and sellers to give more discounts in the future in order to move properties off the market. Now, from the seller side, sellers would have to price properly in order to sell. And we are seeing that the ones that are pricing properly are moving faster off the market. And buyers who are negotiating with sellers should take this into account. They should take into account that prices could fall more in the future. And sellers should also take the future of the market into account. And my predictions for that is that prices will continue to fall, especially in Manhattan and Manhattan adjacent neighborhoods in Long Island City, downtown Brooklyn, Dumbo, but areas in Brooklyn that are farther away, Queens farther away might actually be experiencing more demand, so it's less likely that prices will continue to fall in those areas such as Sheepshead Bay and Bay Ridge, where there's been a lot of buying activity lately. All right, so that was a lot on the sales market. So be sure to leave any questions or clarifications that you need in the Q&A so I can address them. And let's move on to the rentals market. There's a lot more data here as well. And the rentals market has been really interesting because it's been reflecting the current economic downturn in the city much faster than the sales market has been. And we'll see how dramatic that is. So look at these drops. Rents dropped by 8% year over year in Manhattan. Rents have not dropped since the Great Recession, and it's a relief for renters to see such high rent drops, but it's also a really tough time for landlords out there because there's so much weakness in the rentals market right now. So rents dropped by 8% year over year in Manhattan. Rents dropped in Brooklyn and Queens as well by over 2%. So the rentals market is weakening across the city, but it's relatively much weaker in Manhattan. And prices or rents in Manhattan are on pace to fall by more than they did in the Great Recession. So during the Great Recession, a year into the stock market crash, rents fell by 10% year over year. And since rents are already falling by 8% now, they are on track to fall even more. And we might see rents hitting that 10% mark and surpassing it in the very near future, perhaps before a year into COVID. And we're seeing the median asking rent in Manhattan fell below $3,000 for the first time in 9 years. That's the first of many milestones to come. We're seeing a weakness in the rentals market. That's a huge milestone, and there's a huge change from what we've seen in the past, and there's a lot more to come after that. So part of the reason why prices have been falling is that discounts have been skyrocketing and hitting record highs. Nearly half of rentals in Manhattan have had a price cut while being listed on StreetEasy, and these record shares of discounts are one way for landlords to try to be more competitive in order to find a renter. Right now, vacancy rates are high, and we're not seeing a lot of renters coming into the city. So speaking of vacancy rates, we're seeing that rental inventory on the market has increased to record highs in Manhattan, Brooklyn, and Queens. This has been a rapid increase in the summer, as the summer is peak rental season. It's peak season for rents to turn over, and a lot of renters were leaving the city, and those apartments were sitting empty on the market, and they still are on the market. So I would say, when asked about when rents will hit the bottom, how long will rents continue to drop, the reality is it's going to be a tough time for the rentals market. We're seeing that inventory is rising at a faster rate than people are coming back. And until the population recovers, even past the pandemic, we'll continue to see rents drop because vacancy rates will be high. So until inventory is met by demand, it's going to be a downward turn for the rentals market. Now, the rent drops that I talked about is not everywhere, in fact. So we did look into rent affordability and how rents are associated in areas that are most impacted and least impacted by COVID. And the story of rents in New York City is actually a tale of two cities. We looked into the neighborhoods that had the highest and the lowest COVID rates, and we created a custom rent index for those two neighborhoods. So we saw that, for example, the orange line is the areas with the highest rates of COVID and how their rents have changed over time since 2014. And the blue line are the areas least impacted by COVID. So those are neighborhoods in lower Manhattan, whereas the most impacted neighborhoods are places in like Elmhurst, in Jamaica, in areas that are farther away from the city, in Corona. And we saw that during the pandemic, it's actually been that pre the pandemic, rents in the neighborhoods most impacted by COVID-19 have increased by twice as much as the rents in the least impacted neighborhoods. So rents in the outer boroughs and the farther parts of the outer boroughs have risen twice as quickly. And that's been leading to that's exacerbating the affordability crisis for many of those neighborhoods where rents are already high and rents are even rising faster. Now, since the coronavirus pandemic hit the city, we talked about how rents were dropping rapidly in Manhattan. So that's been giving rent relief to people who want to move in Manhattan or want to live in Manhattan. But the same story is not occurring in the areas that are most rent burdened, are most impacted by COVID-19, and in neighborhoods that have more communities of color, more immigrant communities, more low-income communities. These areas are actually where rents have been rising. So since COVID has hit the city, rents fell by about 2% in these areas that are most impacted by COVID aggregated together, but rents have actually increased by about 1% in the areas that have been most impacted by COVID-19. So there hasn't been rent relief there yet. So when we talk about rents falling rapidly across the city, we're talking about a specific area in Manhattan and the adjacent neighborhoods, but it's not the case across the city. And it's actually the case that the areas that are most rent burdened are actually experiencing rent increases and not finding the same rent relief since COVID has hit the city. So some takeaways for the future of the market. I'm always asked about what's going to happen in 2021, and I have a few takeaways. One is that the prices on the market are still reflecting overly optimistic expectations. Like I said, prices have been falling at the same rates as they happened before COVID, but we saw with inventory at record highs, with the homes that are actually being discounted moving off the market faster, and with closings actually happening for the ones that have been advertising good discounts, we are seeing that prices right now still have more room to fall. And for the sellers that aren't giving discounts or are pricing their properties at a higher price than what comes off the market typically, then that's going to be a sign that they have to adjust their expectations of the reality and the downfall of the market in the future. So another area is that we saw that high vacancy rates, high inventory levels on both the sales and the rentals market are going to lead to lower prices and rents. So until more people come in and demand surpasses supply, we're going to see prices and rents continue to drop, and that's just economics 101. And another is that remote work is going to significantly alter people's demand across the city. So before Manhattan and before New Yorkers' decisions when buying a home or renting a home, it's always the question of affordability versus commute time. Do you want something in Manhattan or do you want something elsewhere? Now the question has turned into affordability versus space or affordability versus amenities. And commute time is less of a factor because people won't have to commute to the offices 5 days a week for the foreseeable future. Many people are working from home remotely, so they can live anywhere. So that opens the entire market up to buyers and renters. And that's going to have to decrease the premium price of living in Manhattan for many of Manhattan rentals and sales. And related to that, we're seeing demand already fall for Manhattan properties for luxury condos. There's been a glut of luxury condos on the market. We did research in the past and talked about this at past Decoding the Markets about how 1 out of 4 condos built since 2017 have remained unsold. That's still the case. And these condos are going to have to drop in prices, and there's been less demand for the luxury sector in Manhattan as of late. And also, finally, shared amenities, so buildings with gyms, with pools, with rooftop decks, those are getting a lot less demand on the rental side because renters can't use them and don't want to pay the premium for it. And we're seeing some of that come onto the sales market as well, with less demand for buildings that are larger and have these luxury amenities that people don't find practical during times of a pandemic. So those are my predictions, but that's 2021, and New York City is a strong city. We've recovered so rapidly from the Great Recession, and it will recover again. It's just a matter of time and a matter of all these uncertainties on the market right now as the market adjusts to having more people come into the market, having more demand than there is supply. So that being said, we have all this data that I just talked about available for free on the data dashboard on StreetEasy. I'll do a demo of it now. You can go onto the data dashboard website and actually see like all this data. You can customize it and you can select by neighborhood. So let me just show you what the page looks like. Let's see. Meanwhile, while I'm figuring out how to share my screen for the data dashboard, make sure to drop in any questions you have. Oh, there you go. All right. So here's the data dashboard. You go on streeteasy.com/blog/data-dashboard. And it's really interesting. You can customize everything. You can look at sales or rentals. You can look at any of the metrics that I talked about and more, including median asking price per square foot, which I didn't talk about, median recorded price, new sales inventory coming onto the market every month, the sale to list price ratio, which is the ratio between the asking price and the actual closing price. All of these metrics you can look into and select. You can select by bedroom size, by property types, co-ops, condos, single family, and then hover over any of these neighborhoods and you'll get the stats for the selected metric. And you can also see the selected metric stats when you go over time on this time chart for all 5 boroughs, not just Manhattan, Brooklyn, and Queens. And even cooler, in the bottom, you can customize the dates. You can look back in time. You can select a specific time frame. You can select different neighborhoods or different submarkets and regions or boroughs into this box. You just type what you want to compare. You type what metric you want to compare them on, and you'll get these comparison charts where you can look at 2 areas, 3 areas side to side. And finally, you can always download our data and play with it in Excel or whatever format that you want to play with if you are a data nerd like me. So there's a lot of data out there for you to use, and this is a great tool to share with your clients, to use for yourself, to get a sense of the market in order to see where all these stats are, and like everything I talked about is here. So that being said, I will turn it back over to Lisa. And make sure to drop in your questions for me for the rest of the presentation, and make sure to follow me on Twitter and LinkedIn if you have any other questions and want to stay in touch.
Perfect. Thank you so much, Nancy. We see some great questions coming in, so keep those up. I will invite Stephanie, Devin, and Shauna to turn their cameras on and their microphones on. Nancy, you are welcome to turn yours off until we get to Q&A. And once everyone is up, Stephanie, I will go away again and kick it over to you.
Wonderful. Thank you, Lisa. Hi, everyone out in Zoom land and webinar land. Wherever you're hailing from today, I hope you're safe and dry, first and foremost. It is quite a wet day out. My name is Stephanie Schoenholz. I am the Director of Industry Relations for StreetEasy. I've met many of you over the last couple of years that I've been with the group, and I'm really excited today to have a conversation with Devin Somek and Shauna Tamayose about our experts program. So I wanted to kind of kick it off, and for those of you on the line who are not aware of what our experts program is, it is our agent platform where we are able to connect high intent buyers and sellers with the best agents in the business. And Devin and Sean are with us today because they are 2 of those fantastic agents. So I wanted to kick it off. This is a relatively new product. It's been around for about a year. And the way that StreetEasy kind of goes about crafting our products is customer first. So you'll hear us talk a lot at StreetEasy about the customer being our North Star. And this experts program, the intent of it was with our customers first, and that is how we always run. So the home shoppers that are looking to buy from our platform, looking at their homes on our platform, or they're coming to StreetEasy to potentially sell their homes as well, they're looking at particular buildings, they're looking at particular neighborhoods. And when they come to those neighborhoods, they're now being introduced to experts. So Shauna, I'd love to start with you and find out from you, what do you feel like you gain from our experts program and being matched up with these high intent customers in this new and creative way?
I feel that because StreetEasy is such a strong source and has such a strong presence in New York City, that since we are in 2020 and everything is very technology based, a lot of the clients that we are getting happen to be coming from online. And so what I've noticed is some of the leads that come in, they're significantly better quality than other lead sources that we may have. And I think that part of that is basically showing why StreetEasy is such a big source. Everybody that is looking in New York City knows that by going through StreetEasy, you know, it's the biggest database. And so what we're getting from that is really good leads. We're getting additional lead sources, and really we're getting more connections. And I think that anybody in this business, it's one of the biggest challenges that we have is how can you get more leads, but not only more leads, better leads. And by being a building expert, you already have that next element of trust as opposed to just a lead that you basically bought off of Zillow. Which is another lead source that many brokers do. So it definitely adds more value to our business.
That's great to hear. And I know that Lisa kind of kicked off our hour today by congratulating you on your experts deal that you had come through the program since the pandemic hit. So it sounds like it's working out really well from you. Devin, you know, in terms of how the experts program has delivered a little differently for you, I'd love to hear just a minute about how you've been connected. I know you've had a couple deals in the program as well, and you were one of our first adopters, as Lisa mentioned earlier. So we'd love to hear from you for a minute about how these customers are coming through to you, and how it's a little bit different than the way you've gotten in leads before.
Yeah, I think that, to the brokerage community, we understand that New York City is micro-organized in terms of real estate. So, we know the nuances within each submarket that isn't obvious to, the average consumer. So, we know the every building, every block is very different. And, that localized knowledge is extremely helpful to any buyer. And through this program, you're getting that, that expertise that you otherwise would not get, and it kind of filters through a lot of the nonsense or irrelevant information that you might read in market reports that are too generalized.
That's great. That's great feedback. So for the audience, what Devin is really touching on here is the experts program focuses on what we like to dub as a hyper-localization, right? So the experts that are in our program, these agents and brokers, have in excess knowledge about a particular building, whether it's a co-op, a condo, and in particular the neighborhoods as well. You know all those nuances. And so what I think Devin hit on the nail on the head here is that the customers that are coming to StreetEasy want that hyper-local knowledge from their buyer's agent, or perhaps even their listing agent if they've come through the experts program to sell their unit. So, Devin, I think you bring a great perspective in the neighborhoods that you're focusing on, Shauna as well. And for anybody who's considering the program or who's in it, you know very well that those customers who are, whether they're New York City folks, they're coming in from outside, they want extra knowledge. They want to know that you can walk the walk and kind of talk the talk in those particular buildings and neighborhoods. So I want to kind of take a shift here to talk about kind of one of the cornerstones of the program, which is it was really created to weather kind of the ups and downs of the market. We launched in October of last year. Nobody at StreetEasy, nobody in the world, I think, knew what was coming, 5-6 months later with the pandemic hitting New York City and the shutdown. But it was uniquely designed for that market, right? For these ups and downs that we're gonna have to go through. And agents in our program, in this experts program, do not pay for the leads up front. So it's very different than other lead generation platforms that are out there, where you might pay for the leads up front, and you don't necessarily have the guarantee on the back end that you're going to get something. With experts, because you're not paying to work the leads, the company, meaning StreetEasy and our partners, are succeeding together only when a deal is closing, when a sales transaction closes. And I think that is particularly relevant for what's going on in New York City right now. We're going to take some time to get out of this pandemic. I'm confident that we will. But in the meantime, our partners are able to work these high intent leads with no out-of-pocket cost to them until they close that transaction. So Shauna, I would love to start with you, and if you could give us some kind of feedback on your participation in the program and having that flexibility of being able to work these high intent leads and not having to necessarily pay out of pocket for them up front.
Honestly, I think that it's great. I've had my own friends who are brokers call and ask me about the program. And, before the program started, it was you are paying out of pocket. And I think that especially with the climate on what's going on right now, and that if you're doing deals in this market, this is the most difficult market to try and do any deals whatsoever. It's super easy to do deals when the market is great, but when the market is where it's at right now, it's very challenging mentally, challenging on just so many different fronts, because we as advisors are trying to guide our clients to help them make the best decision, and there's so much uncertainty. So my point being is that the fact that the program was restructured and created so that we didn't need to pay out of pocket really shows how much trust, and it builds a partnership between the broker and the company, because of the fact that the company only succeeds when the brokers succeed. So from a business standpoint, it really helps you, because you're not thinking about, okay, well, how much money am I spending this month, as opposed to how can I just close as many leads as I've gotten, or how can I follow up? It helps to take the stress, the financial stress away, so that you can focus on what's important, and that's helping to advise the clients and helping them to find their new home. So I think that the restructure and the creation of the Buildings Expert program is really helping the brokerage community, especially right now.
And I think that's another great point, that this was really, I love that you use the word partnership. It's something that I often kind of weave into my dialogue with leadership and brokers. This was really a new venture for StreetEasy to kind of, you know, there's a piece here where we have to trust in the brokers and agents that are working these leads, right? We don't get to see necessarily the everyday back and forth that's going on between the customer and the agents. We have to trust that the agents and these partners are going to let us know where they are in that conversation with a buyer or potentially a seller, and report back to us. And we've had great success with the program so far. The two of you are a testament to that. And I'm really excited for the next year of the program. It's only been a year since we launched, and obviously we had a 3-month period of time where the city was shut down, and our experts were creative and still kind of staying in touch with the clients that they had from our experts program, making sure that their needs were being met. So I appreciate that. Devin, I don't know if you want to throw any last thoughts there before we kind of go back over to Lisa for some Q&A, but if you have any kind of closing thoughts on how, not having to kind of pay up front for leads is a little bit different for you, and how your firm is working with experts, and the opportunity that's kind of provided for you in this very chaotic market.
Yeah, absolutely. I think, we're both putting something on the line, the agent and StreetEasy, right? They're providing the lead gen, the actual leads. The agents are providing the expertise. To Shauna's point, there's no financial commitment when it comes to these leads, where now I find that agencies and agents are struggling with marketing costs in a lot of circumstances. So this alleviates that. It's also purely optional, so you don't have to partake. Some agents may argue on the amount of the referral fee, but the way I look at it is, these are somewhat more what I consider qualified leads, and they're easier to nurture because you already have an understanding of that building, of that area. So it requires less research. It's more kind of on autopilot in some circumstances, I would say. So your conversion rate theoretically should be much higher than another lead that may be a higher referral fee, or maybe a paid lead.
Yeah, and that's a great point to clarify there. So those are the 3 kind of high level pieces that I was really interested to get feedback from on our panelists here regarding experts. Again, for those on the line, should you be interested to partake in this program, you can reach out to our team. We'd be happy to walk you through that. But Shauna and Devin, thank you so much for engaging with me in that conversation. I'm really glad to hear that you're having great success with experts. So I will hand it over to Lisa to start our Q&A session.
Thank you so much, Stephanie and Devin and Shauna. Nancy, I'll invite you to pop your camera back on. I'm sure we've already got a slew of questions here, so I'm going to start from the top and get to as many as I can. The first one coming in, actually, Stephanie, I'm going to kick this to you. The question is this program designed for buy side only, or is there an option to get sell side leads in this program as well?
Yeah, it's a great question. So this is actually for both buyers and for sellers to come into the program. So agents that are participating, you will get both types of leads. You're going to get high intent folks coming to buy an apartment or a home in New York City, and you're going to get people coming to StreetEasy to look to potentially sell their listings. So you know that StreetEasy is kind of known as the gold standard of data in New York City for real estate. And if I was a homeowner, I would look to see what's trading in my building, what's happening in my neighborhood recently, or what's recently come on the market. And if I go to my building, I'm going to be presented with experts who have recently sold and transacted in my building, in my neighborhood, and I'm going to be inclined to connect with them to list my apartment. So that's one way that the sellers are coming into this program as well. And I want to just touch on, Lisa, that StreetEasy did recently launch our seller services, which is matching up homeowners with experts in our program to list their properties. So that is another added benefit of being part of our program. So yes, both buy side leads and sell side leads.
Awesome. Nancy, this next one is for you. The question is, why do you think Midtown offered such a large discount? Was it because high-priced new development units offered such discounts, or was it resale inventory being high? What do you think?
It's both. First of all, there's a lot of properties in Midtown and a lot of empty units. The desirability of living in Midtown mainly has to do with community to the offices and being able to walk to work, being so close. And there's also a lot of high-end amenity buildings in Midtown. So those buildings are going to have these gyms and these shared amenities that people don't want to use during the pandemic and have changed their desires for throughout the pandemic for the future as well when they're buying. So these apartments are going down and they have the least demand. We're seeing that the areas that are closest to commuting centers are seeing the least demand because no one has to pay that premium anymore of living close to a place that's their offices. That's how remote work is changing the landscape in demand in New York City, and we're going to see those prices continue to fall, and they've been having some big discounts since.
Makes sense. We're getting a lot of chatter around best practices for converting the leads that you get through the experts program. So I know you both have thoughts on this. Devin, I'll start with you and then we'll kick it to Shauna.
I would say I'm more old school in the sense that I like to engage with my clients, ideally in person, but obviously I know that's not really an option, but right now, for the most part, so over the phone. So I tend, and I tell other agents to call versus sending emails. Emails tend to be easily ignored, or the information can come across confusing. And the way that I try to have these conversations with these clients is I try to provide information that they wouldn't find online about the building. You know, if there's assessments going on, if there's changes internally or on the block, anything that may not be obvious to them to the naked eye.
Makes sense. Shauna, agree? Anything different?
I definitely agree with that. That lead that I closed, she had said that she spoke to several other agents. Well, she didn't speak to them. They all sent her emails. And she said that one of the things that surprised her the most, she said, "You're the only person that immediately called me." And because I asked her for feedback, only because when buyers are looking online, they don't know that they're contacting agents and that agents are going to try and follow up with them. They're getting pulled in so many different directions. They're just trying to find their apartment. And so I found it very interesting from her feedback was the fact that I called her and the fact that I got everything done really quickly. I think that, you know, with all of the chatter around the pandemic and the market not really being so good in terms of business practices and what you should be doing, I think that it's really important to always push, irregardless of what the climate that we're doing transactions in. Meaning that if it's a good market and everybody is making money, it's a lot more motivating to push as hard as other agents, but you still need to conduct your business in the same way, regardless of how the market is transacting right now. So I just did what I basically always do. I, immediately followed up, immediately scheduled, asked for feedback, and been that expert in understanding, as if I were to be her, what would I be looking for? And I think that that's something that's really important for buyers agents to understand. You're basically like a matchmaker, but you're not a matchmaker trying to push somebody on a deal that they shouldn't be going for. It's important for you to be genuine, and it's important for you to still be on top of your game, still schedule your appointment. I don't completely want to disclose what happened, but without giving you full details, is that she was also working with somebody else that I didn't know of. And this other person had just been a little too behind the ball in terms of scheduling appointments. And she felt that that person wasn't on top of their game. And this person was a top producer at another top company, which happened to be at that time in the same office that I was in that I didn't even know about. It was so awkward to find out. But at the same time, when you're working with buyers as an agent, you cannot think that this buyer is exclusively working just with you. And if in the event that they aren't working with just you, how is that other broker providing them a really good service or not really good service? And so, you know, I always make sure to tell my agents, make sure that you're on top of it as if it's your first day in the business. You got to remain not only smart, not only providing excellent customer service, but you also need to be on top of your game because they're not obligated to work with you. And if they do close with you, then that's amazing. That means that you did a great job. But if not, what could you have done in order to be better? So I definitely think that working buyers, because of the non-exclusivity of it, is a little bit more challenging, but it does push you a little bit harder to do the best that you can do at all points in time.
That's awesome.
I would also add to that although to a lot of people, we're obviously in a very bleak market and environment, but you know, my position with that is this is the best time and the best opportunity for brokers to prove their value, right? It's in markets that are uncertain or have never been experienced before, like we're in right now, where the consumer needs that guidance and expertise, right? You're not just a resource for search to go online to send them listings. It's really to provide the value add and the analysis and, you know, the transaction flow from A to Z. So I think it's actually easier and conversion rates should be higher. And this program just elevates that even more. Assuming that you're really in the know and you're an active agent, then I think it's much easier.
That makes a lot of sense. The question that's coming in here is around rentals. So we don't have this on rentals, Stephanie, but can you talk about why not?
Sure. So yes, our experts program is geared towards the sales market only. In terms of the leads that we're giving out, so you will only see our expert contact boxes on properties that are for sale on StreetEasy. As anybody knows who has posted a rental to StreetEasy in the last 3+ years, in order to do that, there is a daily rate that agents will have to pay in order to post those rental listings. So we feel like because agents are already paying to obviously post those rentals, that they have the permission to advertise on StreetEasy. That is a separate product that we've geared towards the rental market. I would like to touch on, though, however, if a customer comes through the experts program and has connected with one of our agents who is interested in buying and then decides for whatever reason to table their search for a home to purchase and they become a renter and they use one of our experts as their rental agent, there is no commission that is being given to StreetEasy. There's no success fee that StreetEasy is collecting from that. So that rental transaction, that rental commission, even though it came in through our experts program, is the agent's until that particular person decides to go back into the market and buy at some point in the near future. So that's a distinction that I want to make sure that people know. We do not have the experts program on rental listings on StreetEasy. However, you might get some rental leads that come through the experts funnel. So even more opportunity, sales listings. So
I actually closed a rental deal as a result of the experts program because I had an investor in a condo that we hadn't listed a unit for rent yet. The lease hadn't expired and it was a few months out. But I got an inquiry through the program and they were like asking if I knew of any 2-bedrooms. And so I was able to link the deal basically offline, never marketed the apartment. And so it was a smooth, successful sort of situation. And I never even thought about the rental sort of component of it until that kind of occurred. So
that's great. And for the audience that was not teed up, we did not know that nugget was coming as part of this conversation. So I'd love to hear it.
We really didn't. I didn't even know that story, Devin. That's awesome. But it kind of leads well into another question we're getting around. There's actually two questions that I'm kind of combining. So do I have to work every building that I qualify for? And what about those kind of lower priced leads? So, someone's happy to work the larger deals in a building, but they also feel obligated to work the studio that isn't really worth it. So Devin, what's your take there?
So on the lower priced leads, I work with a team of agents, and I'll kind of work with them and have them kind of service those, so we're not losing the leads. But in general, I'm an advocate of taking as many leads as possible, because you never know in what direction they're going to go. For example, a sale that I had closed, the buyers are listing their house for sale. So not only did I close the buy side, the sell, now I'm going to be representing them on the sell side, and they also referred business. At the end of the day, real estate, regardless of technology, to be successful, I think long term, it's a referral-based business, and so the referral network from these leads could be tremendous. And then, I think that as far as opting in or opting out, it really depends. On buildings that I have listings that I'm representing for sale, I tend to opt out, and that may be because I'm partaking in the spotlight program or other ways, but generally speaking, I opt in for just about everything, with the exception of buildings that I have a listing for sale.
I think that also, if I could just jump in for a second, Lisa, this speaks to the flexibility of the experts program. So this is an invite-only program. It is the agent's volition to kind of enable themselves on different buildings. While you might qualify for 5 buildings, if you don't want to work the leads in a certain building, the program gives you that flexibility to kind of turn yourself on and off of those buildings in terms of marketing yourself in those contact boxes. So we always want to kind of provide that flexibility for the agents. We understand that your business kind of goes ebbs and flows, and maybe you want to work a certain neighborhood now that you may not have wanted to work a couple years ago, and vice versa. So we like to give that flexibility. Again, to Shauna's earlier point, we want to make sure the agents that are in the program have that hyper-local knowledge, and they have the passion about those buildings and those neighborhoods. So we want to make sure that it's flexible in terms of which buildings you get to opt yourself in for.
Could I add a little tidbit on this? I agree with Devin 100%. I think that it's important to obviously make your own decisions on what you want to do, but from a strategy perspective, my team and I watched our market report on a weekly basis. And so if you know that over 50% of the contracts signed are all sub-million, yes, we would all love to only focus on 2 million, 3 million, 5 million, 10 million. But if there's been, a little over 2,200 deals that's actually been signed, and majority of them is a sub $1 million price point, and we're still in an all commission based business, it's not sexy and it's not exciting to work sub $1 million deals or sub $500,000 deals. But, still, again, we are an all commission business. And so this is where you need to look at your business and you need to restructure it. You need to think, okay, well, if I still need to hit my numbers, how am I going to hit my numbers? Does it mean, if I have a $10 million quota, how am I going to get there? Is it going to be $10 million deal, or is it going to be 10 $1 million deals? You really need to try to focus and look at where the market is transacting so that you can still hit your own sales quotas, because at the end of the day, if we're not doing deals, we're not making money. And so even though, yes, it is onto your discretion as to whether or not, how low are you willing to go, it's still a referral network, like Devin was mentioning, and you still need to figure out how can you make sure, if somebody has moved your cheese and your cheese is money and deals, then how are you going to restructure your business so that you can still hit whatever financial goals that you're trying to hit in the market that we're trying to work in?
It also advances you potentially within the program, right? So if you sell a $600,000 studio in a large-scale condominium, you might qualify to be an expert in that program in a building that might have $4 or $5 million apartments. So
that's right, exactly.
Into a greater sort of sales volume.
The long con, I like it. Makes a lot of sense. We're getting a lot of questions too about this notion of the leads being surprised when you reach out to them and they were expecting to hear from the sell side agent. I'm getting a question here. I often feel like I have to explain that I'm on the buy side. Do you have any advice there for how to navigate that conversation?
I think honesty and transparency is something that is critical to our industry and that sometimes is forgotten. You don't need to feel like you're hiding anything. So I think it comes down to your persuasiveness and your sales ability to present those ideas and in the way that you could, bring that across. And I think that, if you're a good agent, you're able to communicate and then transition into the advantage of utilizing you as the agent and as the resource and the expert. So I've never booked an appointment or worked with a client and not had told them kind of how the lead came in. And of course, there are some people that are resistant to it and only want to work direct, and I'm respectful towards that. Conversion rate is never going to be 100%. It's a numbers game. You just have to be persistent, and you can be very successful, make a lot of money.
Yeah, I agree with that. I think honesty and transparency is really important. I've previously had an experience where I was representing a developer, and this luckily didn't happen to me, but it was a really good learning experience to teach my agents, is that the agent came in, the buyer didn't even realize that she was a buyer's agent. And then she said, I have my own buyer's agent. And I said, well, is this your buyer's agent? And she said, no, I don't even know who this woman is. And it was so uncomfortable because then this older woman got very upset and she said, I don't even want her here. She should leave. And given, I understand why some agents feel a little hesitant to be honest up front. Only because they're so excited to meet a client and to get a deal possibly done. But at the same time, it can put you in a very uncomfortable position, especially if you're meeting a listing agent there. So I always make sure that when I set up a call, that they know that I'm a buyer's agent and I'm a building expert. I'd love to help you with your search. Are you available for a call at this time or this time? And even if I get on the phone, I say the same thing, because I think that especially in New York City, as opposed to other states, everybody thinks that somebody wants something from them. They're always being a little, people are always being a little shysty. I'm from Hawaii. And so that, people in Hawaii are a little bit more relaxed. But you can give out free massages in New York City, or you can give out free things in New York City, and everybody walks past you like, no, okay, I'm good. Because, they always have their guard up. And so if you know that you're dealing with clientele that always has your guard up, it's even more important to be honest, to be transparent. And like Devin said, to make sure that you can provide value as a buyer's agent, so they see, especially in this environment, why it's important to work with a buyer's agent. Because it's not just about, sending them listings. It's about analyzing the market and how are we watching the market to make sure that we're steering these clients to the best of our ability.
Well said, Shauna. And I think that's a really great point to end on. We are at the top of the hour here. So I want to thank our speakers for being on the line and sharing all this great information with us today. I also want to thank our audience and remind all of you that the recording of this webinar will be available. Give us a little bit of time to edit that and send it out to all of you. And please stay on the line to take that survey so that you can be eligible to claim your gift or donation of your choosing. Thank you again, everyone. Be well, stay safe, and we will see you next time.
Thank you.
Thank you.
Hi, everyone.